The AI market is over. Nvidia GPUs are no longer profitable, and this is the biggest bubble of all times, or so many people believe. On today's episode, I want to take a closer look at some of the crazy things we heard today in the overall market and why semiconductor and AI stock investors should not be worried. Let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so in this episode, we're going to cover a lot of different companies. We're going to look at Oracle with the recent bearish news impacting the overall market. We're also going to take a closer look at IREN, and we're also going to look at Dell Technologies and some recent news impacting Nvidia and XAI, Elon Musk AI company. Now, if we start off with Oracle, for those that are not familiar, has become a very popular company because of their massive RPO that they showed in their latest earnings due to the overall demand of AI. And as we see that overall excitement caused the stock to go up to over $300, 328 at one point. Now, unfortunately, we can see that today there was something that created this negative sentiment where the stock dropped nearly 7% in just a few minutes, taking the stock down to roughly 271 before finishing the day at 284. The main reason is this: internal Oracle data shows financial challenges of renting out Nvidia chips. So there was this negative press that Nvidia chips are not as profitable as many people might think. Buying them is just heavy capex, and you're not going to get that ROI. And that's really what's happening here in the AI market. You want to find a reason for this AI bubble to pop, and many thought that maybe this was it. This, in my opinion, was like a very, very mini DeepSeek moment where it created small opportunities for investors that knew there was nothing to worry about. Now, this overall also created some form of negative sentiments towards a lot of AI companies. We see Nvidia was down roughly 2% from its high of the day, going from 189 highs to nearly 185 lows before finishing at around $185 as well. Now, I am going to look at the memo in a bit, but we already have a few updates. We see here from MVC Investing that according to Fox Business, citing sources familiar with the situation, the recent information report on Oracle is off base and does not reflect the actual financials of the business. Nvidia CEO Jensen Huang was also at a recent meeting with Jim Cramer at CNBC Investing, and he mentions Oracle is going to do incredibly well. And when you first ramp up a new technology, there's every possibility that you might not make money in the beginning, but over the life of the system, they'll be wonderfully profitable. I mean, the easiest and a very top level approach to understanding this is, let's say you own a vehicle business, a car dealership, and you lease out a vehicle. You're not going to make money on that vehicle the moment it comes to your lot, because you still have to find customers. You still have to get your first payment and all that. Takes time, right? So it's a business that takes time, and you're not going to get money or become profitable on the first month or even the first day of owning that vehicle. Now, I did create this very simple information that we got right now. So the key findings from the information revealed that Oracle is facing significant financial strain in its race for AI dominance, questioning the profitability of its massive infrastructure investment. And again, even if this is for Oracle, it still trickles down to the rest of the ecosystem. So key finding number one is that there was about a $100 million loss on new Blackwell chip rentals in a single quarter. And this is only a 14% margin on its overall GPU business, a fraction of its software margins. However, I talked about this on my overall post, so make sure to check me out on XS_Jose Najarro. The story is more complex. The analysis may underweight critical timing factor standards and infrastructure buildouts, making the losses appear more alarming than operational reality suggests. So again, I think this is more looking at things in a short-term thing and not understanding the full picture. So internal documents show that GPU rentals were $900 million. Gross profit was $125 million, resulting gross margins 14%. Blackwell specific results were about $100 million loss. The report notes that including additional depreciation could push the true economic margins down to just 7%. The reality, though, this is where it's great to understand how a business works. The losses were reported for June to August, the exact window the Blackwell chips first arrived. This is a commissioning phase, not a steady state operation. You have procurement, you have installation, you have testing, and you have final full revenue. Industry standards suggest 6+ months for procurement to fully operational capacity. The report captures the period of maximum cost with minimum revenue. And this is kind of like a great margin to look at it. Initial deployment, where you have low utilizations, you don't have all the chips on, you're going to have weak margins. Then you ramp up, margins continue to improve, and then you have kind of that mature state where all the systems are on, all the systems are on the workload, you're getting overall great margins. This, unfortunately, though, is going to be a market that continues at least to be very wonky because you continue to invest dramatically over the next few months as more chips are coming in. So Oracle's bull case, they have a massive RPO. They're projected to grow. The bear case, though, is if these economics are shifting a little bit, you have to maybe see a bit of a weakness in margins. But at the moment, I don't think that's happening right now. I think it's just you need to understand the utilization economics before making a piece like this. So for me, I don't think there's really AI bubble just yet. I don't think any form of NVIDIA investors should be worried. And investors in cloud server providers, I think you should continue to invest in GPUs as it's going to be a great revenue for you. Now, talking about GPU players, we do have IREN. IREN is kind of one of those that's starting to become a nice neo cloud player. The stock was up 6.8% on the day, but it is down 4.9% after hours. The main reason is this: IREN announces proposed convertible note offering. So it's pretty much saying my stock price is really high right now. Let me just sell some right now, build a nice amount of cash, and be able to buy more GPUs. So they're raising around $875 million of convertible senior notes through 2031. Now, most of this money will be used to buy more GPUs so this company can continue to grow its overall AI fleet, which isn't doing that bad. For example, most recently, IREN secures new multi-year AI cloud contracts, 500 million AI cloud from 23 GPUs on track for Q1 of 2026. Now, they believe that they're going to get to 500 million annual recurring by Q1 of 2026 with those 23,000 GPUs. Now, right now, they mentioned that they have contracted ahead of delivery on an average term of 2 years at a pricing that supports around a 2-year revenue payback on some of these GPUs. I believe they mentioned 11,000 of the GPUs have been, let's see where I have it. To date, customer contracts have been secured for 11,000 of the 23, representing approximately 225 million in AI cloud annual revenue run rate expected to be in operations by the end of 2025. Now, obviously, this is very bullish. It seems that they're getting good contracts. I would say that I would be a little, not a little bit worried, but something to note or a yellow flag is most of their average term contracts are 2 years. I would be more excited as an investor if these were 3 or 4 years, but 2 years, enough to get money right now, but then how do they make profitable money after that? Are people going to rent out those GPUs 2 years from now, or are margins going to be too low? So I wish their long-term contracts were a little bit longer. Overall, they are moving in the right direction here. Now, there is another AI news that Elon Musk X AI is raising $20 billion, $7.5 billion in equity and $12.5 billion in debt to overall buy more Nvidia GPUs. Now, the funny thing here is Nvidia is investing up to $2 billion in equity, and the way that this overall financing will actually be tied to GPUs as well. It's crazy, but we continue to see very unique ways to build more AI compute. It's also pretty crazy. $20 billion is a lot in a lot of AI GPUs and AI data centers coming out. It's not just OpenAI making crazy deals. XAI is also building crazy GPU solutions, crazy data centers, crazy AI clusters to see the demand of AI. And if Elon is doing it, if Sam is doing it, if Google is doing it, if Meta is doing it, I believe we're not that close to a bubble just yet. Now, the final thing I want to take a closer look at is Dell Technologies. Dell was up roughly 3.5% on the day. The main reason is Dell did increase their revenue expectations for this year to be around 7 to 9% versus their prior forecast of 3 to 4%, thanks to the demand of AI solution and AI infrastructure. Another player that kind of was up at the beginning was Supermicro, thanks to those news. But again, we continue to see that the big winners, at least for now, continue to be the AI players. At the moment, no news got me any excited to buy more shares or sell any shares. I'm still as extremely bullish into the AI market, but nothing too crazy. I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.